All right, guys. I think some interesting stuff is happening today. So let's take a look at these charts. Okay, so the first thing this morning, yesterday, we were able to take out all those bears we were looking for. We got them. We hit their stops. We didn't have to wait till overnight. So then we have the overnight market. Not much goes on. It opens pretty flat. And today, you can see first thing we have is the market moves up. So off the open moves, of course, I'm going to say this every time, you got to take them with a grain of salt because they're right off the open. So this is looking for bears to sample. We don't get transactions till about here, or at least the volume to support some liquidity. So there's our first sample. It is the bears. And what are the bears doing? Just look at tension. This is the same thing they did yesterday. Do you remember? Yesterday, they tried to run elasticity before they got the nod. And they got steamrolled. And guess what? Doing it and failing before doesn't mean you can do it again and have some other outcome. So they show up here. They have a very difficult time having much happen. You see there's definitely effort. There's definitely impact. There are definitely bears sitting here. So, of course, we can mark out those stops. See that high right there? That's what I'm looking at, this bar here. I'm thinking like right in this area. That's where I'd be sitting my stop if I was those folks. All right, so we got them bringing the market down, pulling tension down, just doing an excellent job. And look at this. We do not get a bullish sample. It didn't get to zero. The bulls, it may have done it intra-bar. I don't have that calculation on the decay. Sorry, I know. I should have it on this one. This will calculate intra-bar tests. This one doesn't. It's a little more complicated. It's on my to-do list. But it gets down there. I do not have a sample. I do not have a sample here. The bulls do not get an entry. This is very difficult because if you weren't holding from yesterday into these lows or potentially a retest, I think things were clear about here. If you weren't holding through this thinking it was still bullish, you had a really hard time entering. There weren't any participants. Well, it dips down. You'll notice this yellow one, and I don't talk about this yellow line much because it's a little bit outside of the scope of the analysis we're doing here, but I'm going to talk about it because the bulls had a hard time participating. The yellow line is an activity indicator. It doesn't say long or short. It's almost exclusively suggesting that there's buying, but that doesn't mean up. It means consuming. So what it looks for, it's called portfolio orders. And what it does is it looks across the broad market and it tries to find times where there is activity indicative of large portfolios. And what I mean is not high volume. I mean, and we talked about this a lot, lateral volume. It's the 3,060 stocks or so in the NYSE. So we're looking for volume that has breadth to it, not necessarily volume that has height to it. And I would say height would be a 1,000 contract on the ES. It's a pretty beefy contract. Just to open it means you have to have a decent account. But if you're filling an order that goes, it's 3,000 contracts wide and it's a good chunk on them, that's what we're looking for. And that's what this is. So what this is saying is that there was volume filling up until this moment right there where it ended across the exchange. So as portfolios were consuming liquidity just generally in the background. And that's useful because this morning, these bears had a difficult time and you could see somebody consuming liquidity and finishing. Nice, clean finish right there. And it tends to be when they finish, markets rise. So that's the anticipation. Now, it's a general background thing. It's not something that when you see it finish, you start piling in like it's a buy signal. This is a very tertiary analysis. It's, primary, find the points. Secondary, you look at the narrative, you know what's going on. Tertiary is the things that sort of support and give you structure. This is in that realm of analysis. So it's something that I've noticed. Somebody was filling in general in the background while we had the bears right here who were definitely trying to pump this market as hard. They were just really pushing. Well, we get very close. Nothing happens. Portfolio orders finish about here. So this whole morning, just lots of filling. And we don't have any bulls. They're just waiting. I don't know what they're waiting for. Look at velocity. We have this nice trajectory that leans a little here, but then the apparent trajectory stays in place until the sample there. And we bring that down and right there. And you notice something about that? You see that? This, if you're putting your stop right above here, right about there where you were filling your order was on this's stop. So these guys were consuming liquidity from here and from this. So they're thinking, hey, we got tension moving, we got liquidity here, but they're still trying to run an elastic market without approval. You can't, not allowed. You have to get approved. So they did that and they jumped in again saying, oh, we can do it. And it's, you can't. You're going to get in trouble. Well, the market does finally give us a bullish signal. Leans down. It takes a while to get that volume, but there it is. Here are the bulls. If you were patient and you waited for them, there are the bulls. And then you said to yourself, well, let's draw the layout. We will draw the layout. You see that? And you said to yourself, did these bears get the nod to drive elasticity? Did they? There's some bears. There's some bears. You know, I'm just going to use this stop for it because the other ones, they got stopped out. So, you know, they're probably sitting about here. Maybe a little higher than that, actually. Okay, so we're putting these guys on here. There you go. There's your bears. Here are the bulls. Do you see why the bulls are in a pretty good spot here? They already saw failure by the bears. They already saw them mess it up. They jumped in too early. So we have a precedent to say these bears are doing poorly. That's good for this. So these guys are in a good spot. They drive it up. Now they're sitting right on the backside of those positions. I mean, can you see what's happening here? These bears tried to run elasticity. Oops, the bulls are right here. Here's the first group of bears. Here's the second group. So we have bears coming in and doing everything they can to drive this down and structurally failing to wait for a nod. You need, if they had seen these bulls right here, just, you know, fail, which I wouldn't anticipate after we have, I mean, you have a bag holder right here. These guys, which is a double down right here. It's not working, guys. The bears, it's not working. It's not working. Knock it off. You tried this yesterday. The same thing. Run an elastic market without a nod. It's unapproved. Unapproved. If I had a big stamp, I would stamp it and say unapproved. Unapproved. Okay, so that's where we're at. This market is wanting to make these guys pay. There may be some lingering bears from here, but I assume that, you know, you could see that. You see that acceleration right there? Right at the tip of that? These guys got knocked out. They handed their contracts over. These guys are like, yay, we were patient, but patience doesn't pay when you're being stupid. So they tried to get things down. You could see that tension rolled down. So we do have players here. We do. Then the bulls come in, they pick it up. Why are they having such an easy time? Well, they got bag holders. They got people making mistakes. That's the best way. Okay, so we're looking again to just run the stops. Nothing's changed. This is the same story, almost an identical story as yesterday. And that is running an unapproved elastic market. And yesterday, I mean, they did better today, but because they were able to pump tension, but they didn't even get tension to move. So that's where we're at. We can now start to say, well, it looks like the bulls are going to be able to drive this up, hit the stops again. We'll look for some we'll look for a curl up hitting those stops. Now, what would unhinge me? Or in other words, what's my null hypothesis? What's the thing I'm constantly rejecting? Well, it's the idea that the bears are going to be able to drive this down and liquidate this group, I don't know, down here somewhere. Probably down below this pivot is where I would probably have a stop. Hit that and see tension tank under zero. That's the thing that I'm constantly rejecting. I realize it's possible, I realize the bears could potentially come in and slam the market down. I don't care. Right now, structurally, I see that the bears need to pay for their mistake. They messed up. This is interesting. You see how the SPY has gone, and the ES has gone, see that? I don't know why the noises are important to me, but it's almost like this is weird. This looks weird. They look very different to me. I keep looking at it going, I keep thinking this chart's lagged, like it's not updating, but then I'm like, oh, no, it pretty much has. But price should, maybe it has. Anyway, okay, so now that we've sort of got the layout, we have bears running an unapproved elastic market that's causing their stops to be targeted. Let's take a look at where participants are sitting right now. Now, if we have this lean down, we could sample bulls. And we have this lean down, could sample bulls. So right off the bat, the first thing you know is that any move down samples bulls. That's good for bulls. That means that any time that the market comes down, they're going to get more liquidity, and that'll support their position. That's what this means, and that is a deterrent. If bears come in, that means that all of their efforts at this point in the day will just sample bulls and give them a further opportunity. That's what this is telling me. Also, looking at tension. 30-minute tension could get us a zero test, but not today. Maybe tomorrow there's a potential for a 30-minute zero test. If we had a dramatic crater overnight, daily tension could probably open a lower and maybe give us a zero test tomorrow. It would have to be like this. It would probably look like that. This is what tomorrow would look like if we cratered down, because we get a daily zero test and the bulls would come in and defend. I mean, look, why wouldn't they? They've enjoyed winning for so long. They probably come in. So getting to the bulls is really the only option on the downside. We have bag holders and we have stops. So the thing the market should do is fiddle around at this point and inoculate. And we see this all the time. You see it? Do you see it? So this is the inoculation range, where that we sit in a range and we let people entrench themselves in a position and get themselves to the point where they have to be really close to or really far away from their position. I like it, I don't like it. Either way, it's going to shove you in a direction and you're going to be more interested in your position after a barbed wire range like this, especially when it's on the backside of your position. That's what it does emotionally to you. There's no way out of it. Okay, MD. Okay, yeah, I could describe it. Okay, so what is a nod? Somebody asked, what's a nod? Let me cover that right now. So we're in a little barbed wire range here. A nod is pretty simple. First, so defining the nod. Okay. Now, I call it the nod because it's a social dynamic that's an unspoken social contract. That's a big deal because working with your enemies is treasonous and it is illegal. So we can't have bulls working with bears to screw over the market so everybody wins. That's why it's an unspoken social contract, like a nod. The nod is straight. So the first thing for a nod is, one, you need to know who's in charge. Now, who's in charge has to do with which I call the dominant or controlling party. So I usually will call them one of those things, controlling party. The easiest way to know is you just look at tension. So in this instance, it's the bulls. We can have times when they're both down, and then the bears are the ones who are in charge. The bears are a little more skittish, so they're not as likely to pull off a nod but still, it works on both sides. Who's in charge? The second thing is you want your I prefer the term controlling party. I don't know why. You want the controlling party to do nothing with liquidity. So in this instance, if we had a decay come up, it came down, crossed over, and then we had like some trapped orders show up, and they just did nothing with it. And we saw tension right after a sample like this. We saw tension come down. So there was no, which I guess is, there's a sample. There's no impact. They didn't do anything. There was no injection of capital. Sometimes you can have a little bit of a price response, but it doesn't move, because the price response can happen from the shadow traders. They can come in and they can try and fill orders and create a little demand there. But what's the tell is the tension, because the shadow traders won't impact tension. So there's no impact on tension. And then you would see it price go down like this. If this is a simulated, it didn't happen, of course. And then I'd say, oh, the bulls did nothing here. They did nothing. And then at that moment, once you see the nothing happen, so it takes a few minutes, and you see there's no impact on tension, so you'd see like tension drop like this, you would say, there's the nod. The controlling party did nothing. And they said, okay, bears. Then after you see that, then you look, so step 3 would be the counterparty. They need a sample. And what the counterparty's objective here, I mean, you have to understand the social contract. The contract is pretty straightforward. If you guys drive the market down from the bulls, if you drive price down, that's better for us. We'll buy in at lower prices. And if you're injecting capital, I mean, look at this. If you're injecting capital, you alleviate the tension. So what was this? Is like 45%, I think, or something like that yesterday. We're at 18%. These guys, there's plenty of upside room. We could drive this up intraday. No problem. No problem. They've alleviated all the tension for the bulls. The bears didn't even get anything out of this deal. They just got screwed. So the goal here is, hey, we've got a hot market. Can you cool off the tension? You drive things down. We'll buy at better prices. We'll also get better tension. And the bears will agree to that because they're like, hey, we have a chance to make some money. So they'll drive prices down through the bulls who agree to do nothing. And they're going to screw over the shadow traders and anyone who's not in on the nod. And then everything's happy. Then they can rebuy in and keep things going. So the counterparty is going to get a sample. The counterparty, you know what I mean. The counterparty has an impact. It's important that they impact tension, because if they're not driving tension down towards zero, they're not participating in that agreement. They're going to make money by eliminating the tension in the market. So they have to do that. They'll drive it down. And the fifth thing will be a stop out of shadow traders. And 6, you'll have some sort of zero test. So the stop out of the shadow traders are the ones who accidentally bought into the market and didn't realize that the institutions weren't playing. They're going to get liquidated, and you'll see that because price, a stop out's going to go, and then you'll see it. If you know they're going to get stopped, and you kind of know where their stops are, when you see it whip through their stops, you're going to go, there it was, they're gone. And then the last thing is a zero test. So that nod approves them to drive it to zero. So tension would need to get to zero. And then at the zero test, the bulls will say, okay, thank you. And they'll want to come in and defend tension to keep it from going into bearish territory. So they're like, you get rid of all that tension and then we buy it back in, you make money, we make money. Who's like, everyone's happy, right? And the reason that they will adhere to this is because if you don't trust each other in this world, nobody wins. The bulls will have a difficult time continuing to pump tension higher because it starts to get too hot. So that's bad for the bulls. The bulls are like, we don't want this. The bears give into it because if the bears just sell, they're going to get run over and be bag holders all the way up. So nobody wins when things get hot. So why don't we go from a lose-lose to a win-win situation? And then that's the moment when you're like, oh, everybody wins here. So they'll want to work together because it's advantageous for them to do so. That's the only reason it works. There is no rule that says they must. It's just the fact that if they don't work together, nobody wins. So they give a nod. The bears enjoy some money. The bulls enjoy more money. Everybody gets money, 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 money. So the zero test is the termination or the essentially the end result of a nod. You can drive tension to zero. Thank you. And then they do. Okay, so that's how this whole thing works. So that's the nod. So let's say that the bears come in and hit, like this morning. They tried to hit and they didn't get a nod. What are they doing? If you are trying to run, so this also describes an elastic market. It's basically, when I say elastic, this is the process I mean. You get the nod. Now, if you don't get a nod, what that means is I'm willing to sell into a market that you have control of. In other words, I'm a bag holder. Have your fun. So that was today's problem. These guys who came in about here, where was the nod? I do see volume here, sure. But so you could say, maybe you'd say, well, velocity went over zero. Now, the reason I didn't include this is because we were under and barely sampled into the, no. If we had been waiting for a velocity sample all day and we didn't get it, and then right in the next day we had it go over zero, then I might look at it. But it's not something we were anticipating. It's just this doesn't count in my book. So I don't think the bulls are sitting right here. I don't think there's a bullish position right there. I think that, sure, there could be some buyers. I don't know. They're not the ones I'm looking for. And so decay popped positive. There's our first. They tried to run it wrong. They said, I'm willing to be a bag holder. The bulls said, cool, we're not really buying right now. We're just going to sit back. You can hang yourself. And that's exactly what they did. The bears just got turned over. They just turned themselves over. The bulls didn't do anything. And the bulls came in as opportunists here, trying to drive things up. We have not seen the bears let go. You see that? I don't see an acceleration upward in here. I do, however, see an acceleration downward right here. I'm not seeing the bulls pushing the bears out yet. So we've seen this before too. We see this all the time. All right, look at this. Hangs up, came down, hit zero. So now our velocity number, it went under zero at some point, and this will track intra-bar. So at some point during the bar, we saw a negative velocity number. Now we take a look at the trapped orders, and we're going to track a little bullish sample here right on their position. And this has got to be very frustrating. The bears come in, and then the bulls have a position right on their backside. The bears come in, and then the bulls are going to have a position probably right here. That's very frustrating to have the counterparty, to constantly have the controlling party come in and position right on the backside of you over and over. So the bulls are sitting here thinking, well, right now my stance is that the bulls are going to want to drive this up and force these guys to pay. They need to pay. If the bulls come in here and they're like, well, you know what, we're going to do nothing. They have a DN, do nothing. And they offer a nod. Do you see how there's a problem with that? The whole purpose of a nod, the whole purpose of elasticity is, boy, this market's getting hot. Boy, it would be nice if we could get a counterparty to alleviate a lot of that tension. If we're at 13, come on. Nobody needs to drive 13 down to 0. Nobody. So this is not an intense market. This is not a market where the bears, we gotta get the bears to come in and cool this off. Oh my gosh, you guys, it's so hot. Who's going to solve our problem of high tension? Nobody, because you don't have high tension. So there's our bulls. They're done. Here's our bulls. They're done. This position looks good. We have a big fat loser, a big fat loser. We have someone to pay. There is no reason for this not to make it up again to the stops. And it's like, how many times are we going to play this game? This is the, I mean, it's like repetitive. I don't even know why I'm doing the stream. I should just say watch yesterday's, because this is yesterday all over again. It looks different, sure, but it's the same story. You ran an unapproved, you're trying to run an unapproved elastic market, and sorry, the bag holders are bag holders. All right, so now I didn't mark out. This is exposing my bias a little bit here. Sorry. I need to mark out where the bull stops are, because we need to consider how the bears could be successful more. I can't not mark them as though the. So I think the bulls are going to have their stops much lower down here, which makes them, I don't know if I would say an attractive target, since I think that the bears would run into trouble trying to hit them. And the reason I choose this one, so there's a reason, over this one is because I don't think that there's necessarily bears sitting here. I think this was, or sorry, bulls. I don't think there's bulls here. I think that these guys, this was the best they could do, and this was their maximum spot. So I think just put your stop down there, or I don't know, stick it down there. That's where the stops are going to be for the bulls. So can the bears pull that off? Well, let's talk about it. How could bears get that to happen? How could you get this market down to hit those stops? Well, the first thing that they're going to have to do is find a bag holder. So we have an order right here. So you could run an algorithm down, but this is what the algorithm would have to accomplish. This work right here. They would need to turn both of them upside down. I don't think you could. That's a big algo. I don't know, but that's a lot of money to do this. So this to me looks like a high capital cost. So if bears want to do, the first thing they have to do is get those two things to roll over. The second thing they need is for velocity and decay to kind of get under 0, because right now an algorithm doing this is going to set up a nice bullish position that's going to bounce, because we'll have a sample and tension looks good. It would be stupid beyond all reason to do that. It would just set up a bull. So would they do it? They shouldn't. Could they? Yeah, they can do it. Free will. There's no rules. But it would be really dumb. It would just set up a great. There's institutions are just going to go, that was dumb. They're buy it back up. So they pick it up right down here, and it would move right back up. So getting that algo hit, I think, would be really stupid and naive. Unapproved. The other thing they could do is pull off a decay retest. That's potential. But boy, is that going to be hard to do. A decay retest would mean they need to come up here, get that to test, and then start selling. But doing that would kill them. I mean, look at price. It's already bulls. Bulls are. This is easy. This is easy stuff here. If they try to drive a decay retest, which would be a last-ditch position to try and salvage yourself, and by the time they got it, price is going to be through the roof. Please. And that wouldn't be for 20, 30 minutes, and we only have 22, 21 total minutes. They don't have time. They don't have time to run a decay retest. These bears are screwed. They don't have a choice. The bulls hit. Look at that. Bulls are hitting. Did we expect them to hit? Yeah, because we have a bag holder. We have a position. They broke the rules. You have to punish people who break rules, because that's how money works. This is what we did yesterday. We played this game yesterday and the day before and the day before. It was just bears do it wrong. They get screwed over. So you might be asking, well, is there any other type of market? Yes, there is. We have other types of market. It's just This is what's going on right now. The last couple days are a really good example of what happens when you don't structure your trade well. These bears have constantly made the mistake of thinking that the end of the world is tomorrow, and they're wrong. It's not. There is no demand in the market cratering. None. And they're trying to front run it. They're trying to be trailblazers. They're just so intelligent. You're so smart. You're so smart. You figured out how to sell. And they're trying to front run this idea that the world is ending or something. I don't know what it is they're seeing, but they haven't structured it correctly. Now, are they right? They could be, but it's the structure that's screwing them. If they had waited for a nod, they could have potentially ran this elasticity much more comfortably, but they didn't, and that's their problem. It's structure that's killing these bears over and over and over. Is it rare that the counterparty forces control back from the controlling party? The bears move in, take liquidity, bulls try to... No. This is a probabilities game. So when tension is above zero, the probabilities are in the bull's favor. End of story. So you can't... you could brute force it through. It would be extremely expensive. And you have to remember, you'd be calling the bulls bluff when they're not bluffing. It's all in their favor. All they have to do is buy. The effort that it takes for bulls to drive the market up is less than the effort, significantly, orders of magnitude less than the effort it would take for the bears to drive the market down and into their territory. So they have two steps. First, you have to get it to zero. Then you have to get it through zero. And those are very different. So the probabilities are in the favor of the bulls. So anytime, if the bears wanted to inject all their money, could they? Yes. But if you're sitting at a poker table, do you want to call the winner's bluff? The probabilities are that he has a royal flush. Would you like to call his bluff? It's not a bluff. Those are the probabilities. It's one thing for the bulls to maybe claim they have a bigger hand than they do. But in this case, because the probabilities are up, just brute forcing it down would be calling the bluff of statistics, which is stupid. It's a game that if you iterate many times, you will be broke quickly. You can't do that. So bears can't just run at it. So maybe the question you're really getting at is, well, if this is the case, then how do the bears ever win? Now that's the right question. And I'll show you. Right here. This is how bears win. They get an elastic market that gets to zero. The bulls respond, but not significantly enough. Do you see that? That means the bulls reacted and they did not improve. They should have, right here, they should have drove tension back up, or at least flat, so that the next day they could have injected some capital and easily had things back in their favor. Instead, they lazily picked up orders and lost control of tension, and that's how bears get the market. They drive the zero test, and the bulls don't do enough. They did, you can see here, they did, that zero test generated bullish activity. It did, but not enough to keep control of the market, and then things go underwater, and the bears start doing what bears do best, which is act bullish until one bar, and then act bullish, be bullish, except for that one time. So that's how bears gain control of the market. So right now, if what the bears' objective is to say, well, how do we get tension? How do we get that nod so we can get ourselves a little zero test? And they're basically saying, we promise to let you have the market back at the zero test. But the bears, this is where you would do your attack. If you're going to run an algorithm, you want to hit the market hardest when the probabilities hit zero. Try and get those bulls to lose control of the probabilities. That way you could actually make a bet because they don't have the probabilities anymore. So right now the bears are just sort of trying to not die until they have a good, that's how this works. So you see, this is not successful. The bears did not succeed. They didn't get tension to zero. They didn't get things to work in their favor. They've just lost control. Here, this is even better. You can see things were positive. We had some bearishness here. It went positive. The bulls were excited about it, but didn't quite get daily tension to play along. And the bears came and hit again. You see that? So it's almost like right in here there was some bullishness-ish maybe. But that's where the bulls tried to attack, getting things up. Tension came up, but the bears reasserted themselves, got things back down, but they already sort of lost control of probabilities here. So things start getting shaky. That's where the holes start showing up in your strategy. So then they drive things back down right about here. You could see the bulls are like, oh, zero test. And they went for it. And they came in. And the next day, it seems to me the bears just didn't do enough. And the next morning, look at that. The next morning, the bulls, so you get these shaky times where things are back and forth, and you really have to be on your toes. And you have to say, these bulls came in here, the bulls hit here, the bears reasserted themselves, but lost control of 30-minute tension by the close. This is weakness. And then we drive back down, bulls, and that then finally right about here, we got everything up into the close, and the bulls maintained their control over it. And so, this is just a general overview, and that's what drove this bullishness. We finally saw the bulls come in, hit things back in their favor, and the bears screwed something up. Now, if we went through the intraday market, you would see where the bulls and bears were positioned, and you would see how that you got one side upside down, and that's what led to this. I don't know. I'm not looking at it, but there were probably a bunch of bears who made the mistake of tripling down or something, and their stops were like that. That's probably what happened. And the bulls were better positions, and the bears were screwed over, and that's what drove it up. So and that's the same stuff we're constantly seeing. So right now, what the bears are trying to do is, how do we get this in a spot so that we can get to that zero test so we can attack and see if we can get the probabilities in our favor. You don't want to attack right now. So this is the most likely thing to happen, is to drive things up. Sorry, you didn't do it right. Pay for your sins. And then what we could see, because look at bears, for whatever reason, decided this was a fun thing to pay for. The bulls could have an up day tomorrow, no problem. They could get things, because they have all this room to run tension. They can get things hotter. Now, daily tension's getting a little hot. Usually 20% that's about, on either side, 20 to 20. So daily tension, what daily tension will do during stronger trends is it will max out and it'll stay there. So it'll get up to a level and just sit flat. So we've been seeing it grow, and then we could see it sit sideways. So that's sort of what the bulls are trying to do. But in order to continue to drive that, we got to keep seeing this kind of nonsense every day where the bears make mistakes. You will get really good at picking out mistakes. You should say, you messed up. This is wrong. This is right. This is right. And then you try to align yourself with the people who are doing right. And most of the time, you're going to be doing better than if you try to be the counterparty. You want to be the major party when they get the bag holders underwater. You want to do that, but you need to see it. So that's where we're at. I don't really see a whole lot of options for the bears right now. Maybe the bulls decide to start to cover some positions or something, but as far as I could tell, we're in an emotional channel, and this is really gonna hit the bears hard. I think they're gonna get wiped out in a mean, disgusting, painful way, and they're not gonna like it. And then at that moment, after all these people, all the bad bears get blown out, then we could start to consider an actual elastic market. We could actually consider driving things down. We could actually consider maybe something else happening. Otherwise, on a major longer scale, like on a daily, longer, you can still see that on this 5-minute chart. I know it's 5 minutes, but the daily zero test will be the next major event to watch. to see the bulls come in. And I do expect bulls to defend that zero test because they have been just enjoying supremacy. They're going to want to pick that daily tension up when we get there. You'll have a 30-minute likely first. You'll have a zero test, and it is common to see a zero test blast through here, and then the daily come in and hit, and then everything. The bulls are like, well, let's just wait for the daily because that's better or something. But it'll depend on the context of what's going on the inside to really time that out correctly. But the next major event is going to be a zero test on the daily. I don't know when, I don't know how, but that's the next major event. Minor event tomorrow. Once again, this wasn't a betrayal. This was just failure by the Bears. So Bears failed. Bulls come in to punish. So tomorrow we just reset and do it again. Rinse and repeat, right? So tomorrow the Bears will be looking to again try and get a bullish sample. Can we get the bulls to give us a nod? Maybe we could drive things down. That's always what they want. So that's where we're at with this. Overnight, I expect those stops to get run. We just haven't really seen, we haven't seen that move up that shows us the Bears got, oh, this is, okay, here we go. This is getting interesting. Okay, we just had an algo come in, and it's trying to get through this position, and it needs to take out this position. They're trying to run an algorithm into the close where you got 10 minutes. You got 10 minutes. You think in 10 minutes you can manipulate, because they shut off the NBBO the last 10 minutes, which means that the bid and ask can get all screwy into the close. We don't have to follow the rules as much. They're a little crazier rules. It allows the institutions and stuff to rebalance. That's why they shut that off. It gives them flexibility, I think. So they're running their algo, and they need to get it down through this position if they're really going to get any advantage over the bulls. If they can get that algorithm to push it down, which they're doing pretty good, then they'll potentially have these positions underwater, and they might overnight try to keep hitting. But overnight, it's not as easy to run algorithms. You have to get demand overnight. Algorithms are all about manipulating the mass, the majority, in order to propel a minority. So overnight, there's just not really a great minority to manipulate. Yes, the last 10 minutes is when they run. And they only run murder algos during the last 10 minutes because the NBBO gets shut off. So they're allowed to manipulate the bid and ask significantly more. And that opens up the door to attack. I mean, they know that. Okay, so we're down to 05. Our VolTWAP here is sitting at 39.06. We have, so this is these guys. Just so you're aware, these are the people running this algorithm, and they are trying to get it down, and they need to get it under this position. If they don't get it through that position, this will fold back up and run them over. And the capital injection was stupid. It was a stupid choice. This is not a unique situation. It's not a unique algorithm. This is the situation you always get in when you screw up structure. You get to a point where if you don't run an algorithm and take out the controlling party, you're going to get obliterated, no questions asked. So they have to run an algorithm in this phase. It's usually right after the inoculation phase. We saw this yesterday. They had an inoculation phase. Look, they tried to run an algorithm. It didn't work. We're trying to run an algorithm. They're going to need to turn these guys over. So we'll have to see like 390. We'll need like 390. And then they could start trying to churn it down. But again, look, they're about to run into trouble. They're about to sample bulls again into the close. And we'll have 3 bullish positions into the close where the Bears were unable to accomplish the work they needed to do. They screwed up their structure. I'm sorry. I'd fire whoever ran that algorithm. Unless it was the, for some other dumb reason. I would, if I were running a trading firm and I saw somebody run this algorithm into the close and they were short and they're like, I'm winning, I'd be like, you're done. You're not reading the market right. You want to wait for the market to do this work for you. This is like angel funding. You're investing in a bearish condition that has absolutely no progress, absolutely no success, absolutely nothing to back it. It's angel funding at the beginning of a company that has no success or track record. And it's really, really, really risky cash. That's what this is. They're trailblazers. High risk, insane people, in my opinion. So that's who's running this algo. They're trying to get that to win. They're trying to push those bulls out. The bulls are not struggling at all. This is not like the bulls are in a bad position, but maybe the bulls are cocky. Look at, okay, so we got to 04. Look at that, 39.04. What are we looking at? 90.16. We need to see about 90. If they're trying to get it down here to about 90 to close this out under that bullish position, and that puts a lot of pressure on the bulls. Nobody likes to see a negative number. This is an interesting close. 5 minutes, velocity is at 1. If we get that bullish sample right into the close, I think the bears are going to be really unhappy with what happens. Samples into the close, we had one yesterday even, and it just samples into the close, especially when you're sampling the controlling party, are usually not that great of a swing for the counterparty. But we're about to get there. We've got orders coming in, 4 minutes left. We still haven't seen the sample. I'd like to see that get under 0. I mean, if they're going to run the algo, at least make the setup work. And then once we get this, maybe where are we at? 30, 80. So they're under 90. We got under 90. This algo worked. Just to make that clear, this algo has worked. They were able to get the algorithm. I mean, do you see, I was saying what they had to get done right here. They needed to get through both positions or they were just going to screw themselves over. But they're going to run into this immediate problem, which is that the first thing they're going to do is sample the bulls, which is problematic. It's part of the work to get, if you want to try and take over a market by force, which I don't think this is a great idea for the bears. I don't think taking over a market by force right here is smart. I don't. They should have tried to get a nod, drove this down the way they did. I mean, it's like you're going to put all this effort in. What you should have worked that out, and then they could have continued it down and actually got a 0 test and had a hope of controlling. Okay, here we go. We got our 0. Okay, so into the close, we're going to have a bullish sample. They're just waiting for the orders. So a bunch of people are selling across the stock market, and the bulls are getting a sample. And the question is, are the bulls going to buy it? And I don't see why they wouldn't. Why wouldn't you? You got control of tension. We got a lot of, they're right on the back side here of these guys, 30.90. I don't see why they wouldn't buy this up. And we see the market just go, and overnight, right back up into those bear stops. This capital is going to end up being a terrible idea because it's very expensive to run those algorithms. It costs a lot of money, a lot. And you just injected capital into something terrible. This position lost. This one's essentially in structurally bad position. It got inoculated already. There's counter, bulls sitting right here. There's just, the bulls should come in and pick this sample up. And then tomorrow or overnight, we'll probably see an upward move. If, and this is important because we got to model the other side, a counter argument. If overnight we see the market move down and take out the stops of these bulls, okay, if that happens, then we're in, at that point you might say, well, the bulls failed, and I would argue teeth at that point. Where we saw that the other day, you have the bullish positions come in, it a lot of times will pressure their stops, and you need to be wary of teeth. This is what teeth look like. It's what you do. So If we came down overnight, got that, I'd be looking at teeth. Why wouldn't I call it teeth instead of a failure by the Bulls? Why wouldn't I call it? Well, it's because the Bulls haven't lost control of the probabilities. The Bears didn't successfully do the work, so I would say teeth. That just looks like it's biting you for being a second, that's what it looks like to me. And then I would expect the Bulls probably at that point would at least come in and support, because that's liquidity, you steal from your friends, that's still liquidity. And then they would again have control. Personally, if I saw that, I would try and open the market flat, get tension to open like here, and then have the most upside room to drive. That's what, if I was bullish, if I was not bullish, if I was a major bull, that's how I would play that. So right now, you can see we're getting closer to close. Okay, the market has closed. These orders are done. This sample's in, and it's 39.0475. The Bears drove a bullish sample right into the close. This is a difficult thing for a lot of people because if you're just an intraday trader and you're not willing to look at overnight markets, too bad, you got pushed out. Now the Bulls have their beautiful position and will probably go right back up to the highs. So they got the work done, but they ran right into a bullish sample. They needed more time. They needed time to drive velocity down and decay down and maybe get tension. They needed more time. You ran out of time. This is probably gonna fold them right back over. I think we're gonna head right back up immediately to here, and then at that point the market's gonna go, oh yeah, and the stops. We got to take out these stops, and these guys here, that's who we're gonna hit. They didn't succeed. The algorithm was dumb. I would fire that trader. That was stupid, unless of course it was somebody trying to buy into the market, in which case they lied about being a bear, and that's fine too. Whatever. So that's where we're at. Tomorrow, I anticipate the market to probably open maybe 39.50, 39.50, maybe 39.10 on the ES or something like that. And then the big question for tomorrow, you ready? I'm going to write it. This is going to be the thing that you need to watch. Because tension came down, right? We have, can bulls pump tension? That's the question to answer. And you pump tension by blowing out the counterparty. So they need to trap some bears in a real way and then boom, just punch them. I don't know what that's going to look like. It could look like a lot of things. But overall, the bulls now have tension down. They need to pump it tomorrow, and that's going to be the goal throughout the day. If the bulls come in after this close, where they had the bears just blunder and give us all just a nice 39.04 entry to buy into, if the bulls just blunder tomorrow, like let's say we open, I'm gonna do it here. Let's say we open here and then the bulls get a sample and they just do nothing and this goes like that. This is going to be a nod, and it's also going to be problematic because it pressures a whole day and tension will get down to zero. And I mean, at this point, a nod with like this zero test is coming. Just buckle up for the zero test. But I think this was a mistake by the Bears. So tomorrow, can bulls pump tension? That's what we're all looking for. All right, I'll see you guys in the morning. If you have questions or anything, you can shoot me messages on Twitter. If you're following on here and you're like, this is so neat, can I look at these charts? Yes, you can. The Zoom, I stuck a link down in the description, which Zoom sent me an email about. They said, we scanned the internet and discovered you have links on your Twitter and your YouTube. Delete them. I was like, no. So they got mad. They actually checked. They said that my Zoom was likely to get hacked. But I have the video and audio shut off. You can't share video or audio. So I'm like, I don't care. But they emailed me twice about it. All right, guys, I'll see you tomorrow. Good luck.